So a new report was released just today that shows that the average Canadian is paying over $2,000 in rent, up an average of 12% since this time last year. Meanwhile, house prices are going down dramatically while these rents are skyrocketing. And unfortunately, it seems that heading into 2023, we could be setting ourselves up for the perfect storm where these increases in rent continue and even speed up going into the new year. So let's talk about the three elements that could combine to make the perfect storm for this rent price explosion in the new year, as well as how this, like a lot of other things, seems to be very much linked to the way the Bank of Canada is rapidly raising interest rates and what the government is planning on doing about all of this. So let's get right into it and make sure to subscribe to the channel if you haven't already done so to keep on getting these Canadian-focused financial updates. We've seen this chart on the channel before. This is the house price versus affordability index. We can sort of see here that house prices, the blue line, are going down dramatically, while the affordability for those houses is going down as well. The average cost to maintain a home and to keep a home is going up amidst the higher interest rates, even though house prices are lower. So as a result of this, many people who were looking to buy them would have been able to, even with higher rates or lower rates and higher home prices. Well, they're now looking at the rental market adding more demand into that system. And that, along with a number of other things, combined to give us this new report released today, showing that average Canadians are paying over $2,000 a month for rent when taking into consideration all different types of rentals. You can sort of see that here in this chart. Man, I can't talk. With studio apartments renting on average of $1,400, one bedrooms at $1,700, $2,000 for two bedrooms, as well as $2,383 on average across all of the provinces for three bedrooms, getting us to that summary or that average rate for all of these things at $2,024, putting the average increase year to year at 12.4%. We're seeing this explosion in rent prices right now in 2022, the end of 2022, but there's a number of things that lead me to believe that this is going to continue for the foreseeable future. I think it breaks down to three elements that, when combined, could lead this to be the perfect storm. The first one that we're going to talk about is the impact on builders, people who are building rental housing and people who are building condo developments. We've already talked on the channel about how Rompspin, one of the lenders for these builders, is noticing more and more people defaulting on their construction loans. We've noticed that, but we can also see here in another report that rental construction is well plunging given the current economic environment. Between quarter 1 of 2022 and quarter 3 of 2022, we only saw 1,709 units start their building, especially specifically for rental construction, like purpose-built rentals, and that's 72% less building than compared to 2021, largely again due to the rising interest rates and these people not able to build because they can't borrow for as cheap. And they emphasize this sentiment with this statement here, saying it's clear that rental demand and new construction are moving in very different directions, which is going to continue placing strong upward pressure on rents over the long term. While a more moderate pace of rent increases may be in store in the coming months as the economy slows, record high levels of immigration, low ownership affordability should keep the rental market undersupplied. And this slowdown in housing starts kind of bleeds into the second element that I want to talk about, and that is the fact that there's no longer the rampant speculation in the condo markets that we were seeing over the past 5 years. Instead, now people are sort of getting out of that speculation game because, well, simply it's not working out for them anymore. People in the Greater Toronto area, as well as Vancouver and other major cities in Canada, would be familiar with the concept of people buying condos and selling them and flipping them for a profit even before the condo's even done. This is called an assignment sale, where you can assign the contract to purchase, where your contract has a lower value on it, like the amount you'd actually have to pay to close on the property than what the property is worth. So you can sort of just flip the paper, not even own the property, and make a quick buck. That led to a lot of people thinking that they could just line up and sign up for these condos as quickly as possible and make a profit. But now, because prices are no longer going up, you can't assign the contracts, you can't flip the condos, and especially in the GTA, new condo sales have dropped 79% on an annual basis, 79% less condo sales than this time last year. Now, this is impacting builders big time because they need to sell a certain number of condos before they're actually able to get their financing to build the condos themselves, right? There are these different targets that they have to hit for the amount of sales that they need to sort of release future financing. And that's leading people to say that there's 4 different categories of builders right now, people who are in this have to sell situation where maybe they've sold 30 to 50% of their project, but now they need to get the final 70% to get the final construction financing, that money they need to actually build the condo, as well as these other categories that are, again, sort of pointing at the fact that builders are having a tough time selling their condos right now, and as a result, they're having a tough time financing the building of more condos, which often turn into rental units, and the building of more purpose-built rentals. In previous markets, a lot of the end buyers of these condos were investors themselves, and they were seeking to make money in 3 different ways. The 3 ways that real estate investing can make you money, right? The first one is principal pay down, or the amount on your mortgage that is paid towards principal each month by the tenant that is inside of it, sort of paying down your loan, and you own a larger and larger amount of the property relative to the amount you owe on it. The second one is cash flow, or how much money you make on top of paying your expenses each month from the rent that is paid to you as a real estate investor. So that's things like the mortgage, the property tax, insurance, utilities, all of those things. You're considered cash flow positive if you have more money at the end of the month than you have expenses, and you're cash flow negative if your expenses trump the amount of rent that you're getting paid. And the icing on the cake, or the third way that real estate investing pays these investors money, is through capital appreciation, right? Home price go up, I make money. That's the idea, right? That's sort of seen by traditional real estate investors as the icing on the cake. You shouldn't have to have appreciation to make a good real estate investment work, but many of these condo investors, less sophisticated, maybe didn't run the numbers, and well, they went into situations where they needed that appreciation in order to make their money, right? In fact, in this survey here, this study that I'm going to show you here as I flip to the other screen, it actually talks about how at this time, this study was done in 2018, sort of looking at 2017 data, they said that 44% of investors with a mortgage that took possession in 2017 are in negative cash flow, meaning they're losing money every month, even though they're renting out the property. They were looking for that appreciation as their main metric to make money in this condo market. But now that the Bank of Canada has dramatically increased interest rates, well, that demand for housing has gone down, and no longer can these investors get the money that they were expecting from appreciation because there's nobody buying at a higher price anymore. The buck kind of stopped with them, and that's leading people not to buy condos, meaning these builders can't build and that there will be less rental units in the future, right? And the third element that we need to talk about is, well, immigration. We've got the federal government targeting 1.5 million new Canadians over the next 3 years. That's 500,000 new Canadians each and every year, and certainly that could have some impact on the demand side for rental units as well as housing in general. Now, at the same time, immigration is important to increase GDP and fill jobs in the labor shortage. It's certainly positions that other Canadians wouldn't be filling, and seeing that sort of lack of, or more slack in the labor market would give the Bank of Canada a reason to sort of start bringing down rates again, or at least normalizing them. And at the same time, right now, most new Canadians end up closer to these urban centers where these rent prices are already skyrocketing, and that can be rather challenging. Here's some comments from Benjamin Tal, who is the chief economist for CIBC, where he says it's not so much the number about inflation, but it's the distribution.
It's less the number, it's more the distribution. Most of them go to Vancouver and Toronto. If you provide incentives, taxation, housing, all kinds of other things to send them to the east, to the west, to the ferries, to make sure that it's more evenly distributed, I think then you won't have this pressure that you see in Toronto. We need those numbers, otherwise our population will go down. I suggest distribution is the way. Provide incentives to go elsewhere and provide economic activity over there in other cities, in other regions, as opposed to just Toronto and Vancouver. Because if you continue to go to Toronto and Vancouver, eventually we'll reach a point where you cannot attract them anymore because it's simply too expensive to live in those cities. Right. They will not come. They will not be lining up. So it's going to be counterproductive. We have to have a policy, not in terms of numbers, but in terms of the infrastructure to get them and make sure that they have good life here. And part of this infrastructure is allocation.
And he also brings up the idea there that, hey, if we let rent prices get so extreme here and we have many people sort of going to these places where their rent is so extreme, all of a sudden Canada becomes less of a favorable place to immigrate to. If the cost of living is so high for the people who are here and are already struggling, well, then maybe people will consider coming to Canada less, or it will be less favorable an option. And this is really bad for the long term, because right now in Canada, the average birth rate is 1.4 people for every 2 people, right? So every couple that has a kid, this is how it's sort of counted. For every 2 people, the next generation has 1.4 with current birth rates. So it's super important that we do have immigration to fill these jobs that the aging population is leaving, but we just might not have the demand or the amount of people that want to come to Canada because of this rising cost of living, right? It's such a complex situation. So those are some issues that could make this a perfect storm for the next couple of years to see even higher rent prices. But that leads me to the question, what are the governments doing about it? Well, the Liberal government right now on the federal level, right, national, all of Canada, they have their national housing strategy, which is around $75 billion over the next 10 years to try to sort out this housing issue in Canada. But there have been reports that the reporting of where this money is going and how effective it is actually being at achieving these housing goals, well, that has been called into question by the parliamentary budget officer and the Auditor General of Canada, saying, hey, you're not actually tracking the stats well enough to know that this money is being spent in effective ways. And I've actually made a video that goes into way more detail on that topic, so I'll link it right there so you can take a look at it if you're interested in following that situation, because it's a whole story in and of itself. But now, at the same time, while the federal government is doing this, we have provincial governments that are taking serious action to try to increase the supply of housing in those provinces. Take Ontario's current housing plans that have recently been released, aiming at units being built over the next 10 years, averaging at 1.5 million homes over the next 10 years as part of their More Homes Built Faster Ontario's Housing Supply Action Plan. And they say that they're going to do this by reducing the bureaucratic costs and red tape that's delaying construction and pushing home prices even farther, promoting building up near transit, and reforming zoning to create more gentle density, and protecting home buyers and utilizing provincial lands to build more attainable homes. But while this plan has some positive elements, it also has some negative elements in a lot of people's eyes, because municipalities aren't a great fan of higher density in a lot of cases. We call this NIMBYism, not in my backyard, N-I-M-B-Y, NIMBYism. And that's sort of the sentiment that, okay, once you've got your home and once you've got a place that you're living, well, you don't really want an apartment building to be built down the street, because that means more density, more busyness at your local stores, right? A lot of people are in this NIMBYism mindset. And specifically with Ontario's plan, a lot of people aren't comfortable with the idea of opening up land that was previously environmentally protected to build more homes. So there are pros and cons to taking a high supply approach, right? And ultimately, I'm not sure what the best way forward is. I'm curious what you think about all of this. Do you think that currently the federal government's going in the right direction? Do you think that maybe this is all a little bit overblown and we won't see rent prices going up as high as I think that they will over the next year? Or am I missing something entirely? Have I not talked about a topic that you think is really important? Let me know in the comments. I read every single one and I try to reply to a bunch of them. And if you haven't already done so, make sure to subscribe to the channel to keep on getting these Canadian-focused updates. And with all of that said, thanks so much for watching, everybody. Really hope this video helped you out at least a little bit, and I'll see you next time.